traders, and welcome to a new day trading strategy video of mine. Today's video is going to be on the theory of supply and demand. So we're going to be looking at why market movements occur and different types of supply and demand that cause them. I've done two videos on this before. I did a video on supply and demand runs. I've done a few on that, which is looking at short-term movements in the order book. And I've also done a video on supply and demand zones, and that's going to be just slightly different than this video today. But slightly similar at the same time. Additionally, we have a price prediction challenge. What will be the highest price of BNB BTC by Friday? If you want to participate, you can submit your prediction by private messaging GameBot on my Discord with your chart and the price that you believe it will go to by Friday. Okay, so let's begin with why does the market move? You may have heard many times before that an uptrend is caused by an imbalance of demand and supply. When demand is greater than supply, price is going to continue to move higher until demand meets supply. One way to think about this is a farmer's market. And imagine you have people selling apples and people buying apples. What you may see is that if many customers want to buy apples, then the vendors who are selling the apples are likely going to mark their prices a little bit higher due to the high amount of demand and the high amount of buying that is likely to occur. On the flip side, if the customers discover that the apple vendors have many apples and that supply is very high, then the vendors may need to mark their price down a little bit lower as they compete with one another to try to sell their apples for a lower price. So this is what you want to think about when we look at supply and demand imbalances in the same way that we look at the market. We do want to go one step further, not just say demand is greater than supply, price goes up, and vice versa, price goes down. We also want to look at tapped amount of supply and demand. One way to think about this is it's the supply of supply and demand, but I didn't really want to put that because it's kind of confusing. There are a limited amount of buying and a limited amount of selling that can occur in a trend. So what that means is in every uptrend with any kind of coin, there's going to come a point where many traders who wanted to buy have likely already bought in. And if there's not enough actual demand present, then price is going to have a hard time moving higher because there aren't enough traders to buy and press the price higher. And at that point, that would be called an overbought market. So that's what we want to look at when we look at the tapped amount of demand in an uptrend. In a downtrend, when supply is greater than demand, we're going to find a point where we're oversold. When we're oversold, we're going to see that many traders who wanted to sell have likely already sold. So what this means is once many traders sell who wanted to sell, if price goes much, much lower, there may come a price where the sellers don't want to sell anymore because they believe the price is too low and price is naturally going to move back up on demand, go a little bit higher until supply meets demand again, continues the downtrend, or demand just picks up and begins an uptrend altogether. So that's what we're looking at when we're looking at the tapped amount of supply and the tapped amount of demand within trends. So with standard supply and standard demand, as I said before, these two do hold true, but we also want to look for evidence that demand is higher than supply and evidence that supply is greater than demand. We want to buy when demand begins to rise, and a sign that demand is beginning to rise is high volume, strong bullish momentum candlesticks. So you may see a period of consolidation or a strong downtrend followed by a period of high demand with bullish engulfing candles, hammers, that kind of candlestick, and we see high volume and strong bullish movement. This is a sign that demand is beginning to rise and we likely want to buy in. Another great sign that demand is beginning to rise is when we see little to no pullback. High demand in the markets also comes from bidding. We have bids and offers in the order book. When many bids are present, price is going to have a much harder time going lower. So what you may see in a price chart is price going like this and then barely going lower and continuing to go higher. This occurs because bids are constantly front running each other to the point where if one was to sell, they wouldn't change the price much because they would be selling just down to a strong bid as the bids continue to go up as price goes up. So this is what's going to cause little to no pullback. If you see major pullback in a market that looks to have high demand, That's typically a pretty bad sign because we shouldn't be seeing major pullback in a market that does have high present demand. Flip side, when we get supply, we want to sell when supply is beginning to rise. So just back to our farmer's market example, if we're a vendor and we see from other vendors that they have many more apples and that they're getting many more, shipments of apples, customers might find this out and might want to buy at a lower price because there are more apples to go around. So what we may want to do is sell before the other vendors begin to sell at those lower prices as they have more apples. So this would be selling when supply begins to rise. Again, we would want to see high volume, strong bearish momentum candlesticks with little to no bullish pullback. So here's an example of what that's going to look like on the demand side. BNB, BTC, we see two main things. We see strong volume, strong momentum at the origin of this uptrend after consolidation, as you can see here, and at this phase of the uptrend as well. The second thing that we see is no major bearish pullback. I don't really see any major bearish move here. The most bearish move that I could see occurring is around here, and each time it did make a bearish move, it was followed by, you could see a bullish run after each move. This is showing us that demand is likely still high at this point right here. I don't know about this point yet because BNB, BTC may be doing some other things right now, but at the origin of this, we can see high demand present, little to no bearish pullback. This is a sign that we want to buy into the market for a hold. And that would have worked pretty well if we had done that. Slightly more complex, but I think a little bit more important even, and more prevalent in the market, is forced supply and forced demand. So I've talked about this before. Forced supply and forced demand are trades that a trader does not want to make. Usually when a trader enters or exits the market, he wants to. But imagine that a trader is at a loss and the price moves down and hits a trader's long stop loss, which executes as a market sell order. He doesn't want to sell at a loss. That's not standard supply and demand because he doesn't want to sell. And usually when many retail traders place their stop losses, they like to place them very close to one another, right below support. So that's going to cause cascading stop losses, as you can see here. And this cascading stop losses of forced supply or forced demand is likely going to look like a price tail. Because what's going to occur is if price moves right below support, price is going to be moving very, very quickly down below support as those stop losses cascade downward, clearing many bids. And then what might occur is there might be a period of market buying of maybe some smart money traders who are beginning to buy in, or some savvy retail traders who are trying to stop loss hunt, and price is going to go a little bit up, and then that's going to cause that price tail. And if price doesn't go back down to that price tail, that would be evident of high demand and forced supply. So like I had said, these are located typically just beyond support resistance and allow smart money to pick up their liquidity. So let's take a look at some examples of that. Here we see a low here and some lows here, and maybe some lows we can factor in around here. And then we see price go slightly below this low here before moving much, much higher. And price is now, at the time of this video, at around the 600 right now. So this would be a point of forced supply, where as you can see, we have high supply. Supply is greater than demand, as you can see here. And then we get to a point where a quick amount of selling occurs and we get a price tail down to here, and then price goes higher. That's what is going to be forced supply turning into demand in the market. When we look at BTC USD on Bitfinex, this chart, it looks a little bit all over the place. A reason for that may be due to a large amount of forced supply and a large amount of forced demand, with some possibility of artificial supply and some possibility of artificial demand as well, but we'll talk about that a little bit later. Here we can see the first example. Price goes a little bit above the high here. Potentially some retail traders market buy in. This also may hit some shorts stop losses who are trying to scalp this market to try to fade the uptrend here and play this market. We can see that many of their stop losses get hit. We have forced demand that ends up as not standard demand. If it was standard demand, price would not have gone down to here. It would have likely just continued to move higher. And then price goes lower before we get a stop loss hunt right down to here. For those who've seen my stop loss video, this would be a 3-point stop loss reversal structure. You get a low, you get a strong demand move, and then you get a second low before price goes higher. We can also see that here as well, where we get cascading stop losses down to here, potentially some cascading stop losses. I say that because we have an established low here, but we also have an established low down here, meaning that any traders who may have bought in here, may have bought in here, may have bought in here, likely put their stop losses right below this low right here. So what's going to occur is if the market comes to that level like it did here, it's going to cause cascading stop losses of forced supply. And then the forced supply dropped out, we have a price tail, and we get a great buying opportunity if you had bought in around here-ish. And now price is much, much higher. So now I want to talk about artificial supply and demand and not just standard and forced supply and demand. Artificial supply and demand is hard to detect, and for good reason as well. It has to do with order book manipulation of fake bids and offers. You may have heard wash trading and spoofing. Spoofing is the act of placing limit orders for psychologically influencing the market, but not ever wanting to have those limit orders executed on. Wash trading is a little bit more complex. That's where we have fake buying and fake selling. Quotes on fake buying and fake selling. You can look up the definition of this to generate volume and to make the market look like it's doing one thing when it may actually be doing the other. So here's an example of artificial supply, artificial demand. You can't really find artificial supply and demand on a standard trading view chart. So that's why I'm pulling up a tensorcharts.com price chart, as you can see here. These yellow lines represent limit orders over 100. We can see that there were many limit orders that trailed the price. We had one here, one higher here, and then one higher here right before the massive bull run. And reason that occurs is likely that smart money had accumulated positions, and what they're doing here is making sure that that demand is high, so that price is going to go higher so that they can make money. And as you can see here, they were successful and price is much, much higher. So I wouldn't worry too much about artificial supply and demand. I just wanted to put this in here to hit all 3 points of major supply and demand. But this one's a little bit trickier, I will say, to find in the market. Okay, so quick checklist when you're trying to make short-term predictions on supply-demand moves. You first want to ask yourself, is the move standard supply and demand, forced supply and demand, or artificial supply and demand? You can look at this from just looking at lows and highs, looking at volume, looking at momentum, and looking at candlestick patterns as well. We also want to ask ourselves what price areas likely contain high liquidity. Typically right below major lows and right above major highs, we get high amounts of liquidity. So liquidity pool here that was tapped into right here, as you can see. And then we also had a liquidity pool, not as big, but still one, likely right below here, as any traders who had bought in here likely put their stop losses right here. They get hit, price goes higher. The third thing we want to ask ourselves are, have the traders who wanted to sell into this downtrend already sold? This would be known as tapped supply and would be a point where we want to buy. We also want to ask ourselves, in an uptrend, have all the traders who wanted to buy into this uptrend already bought? Because if many traders who had already bought into a market, then at that elevated price level, we might not have enough buying, so price may go lower before it finds more buying. All right, so now let's go into some examples here. So if we're looking at this market here, a few things that I do see. We see the market go slightly above a high here before faking a movement back down, before going right back upward. Just standard altcoin practice, as you can see here. And then we get a established low here after a strong downtrend with this kind of market move. So what type of market is this? And is this bullish or bearish? I'm going to give you guys 3 seconds for this one. So this would be an example of tapped supply, also known as forced supply. As you can see here, I say tapped supply because it's likely at this point that many traders who wanted to sell have already sold. And you may be wondering, well, why? Well, we see a major volume spike that occurs about here. We have a sustained downtrend around here, and then we also have a stop loss on here with a bullish reaction to that stop loss on. So price goes higher, as you can see here. This would have been the optimal spot to buy in, to counter trade the market here and buy in at around 2,500. And you would have made a nice little profit if you had price go up to here. Another example that I just wanted to show here was this is an example of tapped demand. This was a point where many traders who wanted to buy into the market have likely already bought. We can see many tails around this price level. Price isn't really able to make new highs besides making a weak high here. And then we get price move from here all the way down to here. So one last example here, we have ONT or ONT, I don't know how to pronounce it, to Bitcoin. And here we have a market on the 1 hour. So does this look like actual demand and supply, or does this look like a stop loss hunt where we're running out of demand and price is going to go lower? So I'm going to give you guys 3 seconds for this one, and then I will reveal and talk about it. Okay, so this was just an example of high demand. Price went much higher. This was the point where I indicated at the picture. And price went, I think, about a 70-80% increase, 70% increase from here up to here to the very high, and has continued to move on high demand. Let's go back to the original picture here. What we see is strong volume. As we can see, we have a lot of bullish volume, and we also see very strong bullish candlesticks as well. And we additionally see very weak pullback to really not much pullback at all. This is not an example of the price just going slightly above this major high here, tapping into a liquidity pool and then going lower. This is rather just genuine demand that caused price to go much, much higher. So that's going to do it for this video today. We've covered standard supply and demand, just looking at imbalances of supply and demand, and also overbought, oversold. We also looked at forced supply and forced demand. This is what occurs when traders who don't want to exit the market have to exit the market because their stop losses get hit right below support and right above resistance. And these are points where we can counter trade. And finally, we talked about artificial supply and demand of looking at order flow on tensorcharts.com to try to find spots where spoofing or potentially wash trading is occurring. So with that, happy trading.